let's talk about a new IPO that is underway, and also it will be hitting the bourses soon. We have Mr. Suresh Kumar, is the MD at Allcargo Terminals, joining us on the show. A very good afternoon to you, Mr. Kumar. Thank you so much for joining us on ET Now. And let's talk about what are the plans for your company post the listing. How has the demerger actually unlocked the value for you?
Thank you. Thank you for joining us today as we start a new journey in the Allcargo Terminals Limited avatar. Pursuant to the strategic demerger, which the Allcargo board had approved, supported by our investors, and then the NCLT cleared. So the whole process had taken time, and today we have listed. The rationale behind the demerger and the separate listing is something that we have spoken about in the past. Quickly to refresh, this offers Allcargo Terminals Limited strategic independence and financial flexibility to access resources that it requires for its growth plans.
Mr. Kumar, I just also want to understand what are your plans to expand your footprint in India and the global markets as well. What is the strategy here?
So our priority is the Indian market. It is India's decade and in India's time to shine. Therefore, in the Allcargo Terminals portion of the business, our focus will be on expanding into the newer ports which are being set up. For example, I could tell you about Chennai, where we have a successful CFS facility which has been running since 2007. But in Chennai now, if you were to look at it, there are new ports which have come up closer to within the city, not within the city, out just in the outskirts of the city. But if you were to look at it, cargo movement is now split between the two port clusters, if I were to use that terminology, the erstwhile port and the new ports which are coming up in Kattupalli and Ennore. So we would be looking at opportunities to expand wherever there are new ports which are coming up and which show promise. And there are many of them across the country which are coming up. And we would like to extend our facilities into these regions.
Right, Mr. Kumar. Firstly, I stand corrected. Not IPO. It's just muscle memory, given the fact that we've had slew of IPOs off late. But I stand corrected on that particular front. But if you could tell us, what is the current capacity utilization for Allcargo terminals? Any plans to expand your warehouse capacity? Also, if you have already planned on that particular front, then how many warehouses are you planning to add, at least in this calendar year?
So currently, our yard capacity utilization across the 7 CFS facilities that we have would be in the range of about 80%, which is a healthy utilization level at this point in time. We operate within CFS ICDs close to 1 million square feet of warehousing. That's what we currently have. And in terms of expansion in future, it will be linked to the new CFSs that we launch, in which we will have additional warehouses and additional yard capacity. We are also looking at opportunities to expand the existing CFSs where we have, if we are able to access real estate adjacent to the facilities that we are currently in.
Right, and also, for Allcargo Logistics Groups is also planning over 1,000 crore of investments by its demerged subsidiaries. Now, Allcargo Terminal and Transindia Real Estate. How will the funds be utilized? What will be your areas of investment that you will be making?
So I would like to talk on behalf of Allcargo Terminals, and then the Allcargo Terminals business model that has been successfully created and that's been successfully running is based upon having the right assets and being asset light. What do I mean when I say that? We have most of the yard capacity through the leasing route. We have our equipments which we have leased out through long-term contracts, given the fact that we have scales by our presence across the country. Therefore, we operate with very, very less capex requirements, and we expect that to continue in the coming quarters. So expansion for us would be adding capacity, yard capacity through leased model, warehousing as much as possible to follow the same approach, equipments, which is a key component of what is required in running a successful CFS. We have a model of lease rentals, and even the transport that we have is through national contracts and contracts wherever possible with transport agencies or transport vendors who are able to give us the best rates. So if you were to look at the key cost elements of our business are all based on a lease model, which gives us flexibility and also choice, and which also keeps us asset light and are not hungry for a lot of capex.
All right, Mr. Kumar, we leave it there. Thank you so much for joining us on ET Now and talking about the way forward going ahead for all cargo terminals. And on